Hi everyone, and welcome to the Element Academy virtual classroom. My name is Megan McCauley, and today I'm going to walk you through budgeting and business planning with Element. So today we're going to create a business plan by using the Element budgeting tool and building out all of our forecasted sales for the upcoming year. So trying to outline what our sales targets are going to be so that when we go to estimate, we actually have sales targets to achieve or to reach as we move throughout the year. We're also going to work together to outline all of your costs of goods sold. So your labor, your equipment, your materials. If you use subcontractors, we'll want to enter that information into your budget as well. And we're also going to take a look at overhead expenses. So I know everybody loves all those overhead expenses, all of those indirect costs. We do need to get those into your budget so that we recover those costs when we go to build our estimates. And then at the end of the session, we'll take a look at where your net profit sits, and I'll show you how to analyze your budget to increase that net profit if we need to. So some tools that you'll need for today is a profit and loss statement will be really helpful, whether that's from QuickBooks or any of your accounting software that you're using, as well as a payroll summary, because we are going to outline staff wages into our budget. So we'll need all of that pricing information. And then you'll also need a list of equipment with your payment and purchase information, and we'll get that into your budget as well. If you have questions as we're moving throughout the session, you can use the panel on the right-hand side and you can enter those in there, and I'll save some time at the end of the session to answer any questions that have been asked. And last but not least, we are recording this session. So if you miss anything as we're moving along through the webinar, you can go back afterwards and take a look at the recording and catch up on anything that you missed. So without further ado, we'll jump in and we'll get started. So what's in a budget? So as I mentioned, this is going to be our business plan for the upcoming year. And first, we're going to forecast all of our sales. So that's going to be all of the money coming into the business. And I'll show you how to split that up by each division so that it's easier to read and copy your budget as you move year to year. We're also going to want to determine our cost of goods sold. So this is going to be our field wages, our equipment costs, as well as our material and subcontractor costs. So everything that we would be estimating to recover the cost for. I would say that's the easiest way to distinguish between a cost of goods sold, your direct costs, what you estimate to recover, and then versus your overhead expenses. And your overhead expenses are going to be all of your indirect costs or all of those company operating costs that you wouldn't necessarily charge directly on an estimate for. So things like rent or uniform expenses or even your Element software. And last but not least, after we outline all of our sales and costs and expenses, the system's going to produce a net profit for us. And this is going to be all of the money that's actually going into your pocket at the end of the day. So we want to make sure that the net profit is in a positive situation so that you're actually recovering all of your costs and then making money on top of that when you're pricing your work. So why create a budget? I will say that after working with a lot of contractors, most of them don't actually have a budget at all. And this is definitely the most important aspect of your business. It's building a foundation so that you can build pricing for your customers. So you'll have more confidence in pricing your work. You won't have to guess on what your pricing should be when you go to build your estimates. So really allowing for you to see what your numbers are. You'll be able to provide discounts if needed, and just know that your pricing is set right on target so that you're recovering all of your costs and again, putting some money in your pocket at the end of the day. It's also going to give you a clear plan for hiring new employees and setting wages for staff. So if you have more sales as you outline them in your budget, maybe you're going to need more labor power to actually complete that work. You'll also want to make sure that if you are going to give bonuses and raises, that we do include it in our budgeting plan so that you can see if you can actually afford them or not. The budget is also going to help you invest wisely and confidently in your business. So if you need to purchase new equipment, you can see if you can afford that, as well as maybe you want to do a new office renovation. Any of those planned items that you do want to do for your business to actually grow your business should be outlined in your budget so you know whether you can invest in those new strategies or not. And last but not least, the budget will produce that net profit for you so that you are putting money in your pocket at the end of every single year. So this budget is really going to help you create a plan or strategy for the upcoming year, set your targets, and make sure you actually achieve them or reach them. So a few best practices here before we get into building a budget is you'll want to start with a company-wide budget. So this is going to include all of your divisional sales and costs. This is going to help you when you go to eventually, if you do create divisional budgets, all you'll need to do is actually use the copy button to create new budgets year over year. And with that being said, you can review and update your budget annually because your costs and your sales and all of that information is going to change on an annual basis. So you'll want to update it in your budget so that you're pricing your work properly on your estimates. And just as a hint here, Element does come with sample information, including sample budgets. So the easiest way to get started is to take a look at a sample budget that's most similar to your company, and then we can copy it, and then you can manipulate it so that you don't have to do double manual data entry. So we'll jump in, we'll get started, and we'll log into our Element accounts. So if we're in Element, we'll click on budget on the left-hand side, and this is where you'll see those sample budgets that I just mentioned. So you might see a $1 million budget, 10 million, 20 million, 3.5 million. Again, take a look at those sample budgets and choose which one you want to use to copy so we can create a new budget together. For this example, I'm going to use the $1 million budget. I'm going to click on it. And on this screen here, you'll see a copy button in the bottom right-hand corner. So we'll go ahead, we'll click on the copy button. And up above here, you'll be able to give your new budget a name. So some companies like to use just their company name, and they can put the dollar amount of their revenue, or some companies like to enter in operating budget, and then they can put in the year. So down below, you'll also choose your budget year, and then you'll enter in your company name. And we'll go ahead and click OK. And just like that, we've copied that sample budget, so it's keeping that sample for us. And then we've just created a new one, and you can see that it's under construction on the right-hand side. So up above here, as you're entering your information into your budget, you can always come back and take a look at your budget info tab. This will give you a quick summary of what your sales goals are, your profit goal, and your profit margin. And it will also show you a budget history. So who owns the budget, who it was created by and when it was last updated. So if you have more than one person working within one of your budgets, this is a great section to take a look at to see who the last person was that updated it. Now down below, you'll see your budget properties. So that information we just filled out when we copied our budget. And then you'll also see the work breakdown. So this is important if you do want to compare your numbers to other profitable landscaping companies that do similar work to you. So you'll want to enter in here the percentage of sales for each type of work that you do. So design, build, install, grounds maintenance, irrigation, and snow and ice. Now, these are the most common types of work that landscape contractors do. So you're only seeing 4 options here. If you have other divisional types of work, you can just lump them into one of these 4 categories, and it will still compare your numbers to all of those other industry averages. So again, important to enter in your percentage of sales for each division outlined within your work breakdown. All right, so that's it for the budget info tab. Now I'm going to jump back into my slide deck, and we're going to take a look at the sales budget. So the sales budget is actually going to allow us to outline and forecast our sales goals for the upcoming year. So this is going to determine how much revenue we're actually bringing in at the end of the day. And it's going to ensure that we recover all of our expenses and our costs. So a few best practices when entering your sales into your sales budget is be realistic. You don't want to underestimate your sales goals or overestimate your sales goals. So if you overestimate your sales goals, you might be pricing your work a little bit too high and you won't be able to win any work when you're bidding your estimates. Now, if you underestimate your sales goals, you might not be pricing your work high enough. So you're not able to actually recover all of your costs that you've outlined in your budget. So just be careful with this. Try to be realistic about setting up your sales goals. And you can take a look at the jobs you've already won for this year and see what's coming down the sales pipeline. Might give you a better idea of how you can actually forecast your sales. You'll also want to set your sales goals by division. So most companies do have 1 to 5 major divisions, and I'll show you how to set those up in the budget for each line item. And don't forget to include your cash sales. So if you do cash jobs, we still want you to include them in your budget because it's going to help you recover your costs. And last but not least, don't stress. We can activate your budget and you can always come back into it to make any changes that are needed. It's not set in stone once you activate it. That's a common question that we get from customers. We can always come back and change any of this information if needed. All right, so let's jump in. We'll take a look at our sales budget. So back in Element, we'll click on sales on the left-hand side, and this is where we're going to forecast our sales for the upcoming season. So you'll see down below here, I've outlined my sales goals by division, and you can add a new forecasted sales line item by clicking on new, and then we can enter that in down below here. You'll enter in your forecasted sales goal as well as your previous sales goal. So my previous is going to be whatever I made within, for example, my irrigation division last year. So let's say that was about $75,000, and this year I'm forecasting that I'm actually going to increase this sales goal because I do have more irrigation type jobs. So I'm going to average that out to around 100,000, and I'm going to click save on the right hand side. So you'll see up above here that it's totaling my previous sales from last year as I enter them into each column here. And then it's also adding up what I'm forecasting to make in sales for each division for this year. And on the right hand side, you can see the change over previous. So what I'm forecasting to increase my sales by for this upcoming year. And as you're working through your budget, don't forget to hit Save Changes in the top right-hand corner. We don't want you to lose any of your information as you're working through building your budget. All right, next let's take a look at our field labor budget. Now our field labor budget is going to be all of our forecasted labor costs. So that's going to include all of our employee wages, as well as bonus dollars, and any overtime hours that our employees might work. So this is going to help us plan for how much labor power we're going to need in relation to what we forecasted in sales and for what upcoming jobs we have for this year. So a few best practices here before we enter in the information is you'll want to enter in your field staff only. So it's important if you estimate an employee's time to recover the cost of their wage, you'll want to include that employee in this section of your budget. You'll also want to forecast your labor versus your sales goals. So as I mentioned, if you're forecasting more jobs for this upcoming season, maybe you need to add an additional employee to actually complete that work. So just keep that in mind as you're entering in your forecasted sales as well as your field labor budget. And if you are going to give raises or promotions this year, you'll want to include those dollar raises within your field labor budget. It's allowing us to forecast to recover for those costs when we go to build our estimates. And to make it easy for you when entering this data, you'll want to group your staff by role. So instead of entering in foreman Joe or laborer Sarah, you can enter this in by the type of role that the employees do, just making it a little bit easier as you go from year to year building your budget. You won't have to actually edit any of the people's names if you keep them generalized. And you'll want to include a portion of the owner's wage within your field labor budget only if they work some of their time in the field. And we would outline the other half of that owner's wage within our overhead expenses. And I'll show you how to do that in just a little while. And last but not least, if you do use temporary labor or you're using an outsourced company for temporary labor, we will want to include those individuals who we hire for the season through our temporary labor agencies in our field labor budget. We don't want to enter those in our subcontractor budget. They want to go in our field labor budget. So we'll jump in, we'll take a look, we'll go back into LMN, and we're going to click on field labor on the left-hand side. So down below here is where we're going to enter in all of our hourly field staff. Again, you can group them by role, making it a lot easier. Even when you're estimating, you don't have to choose an individual person's name. It's easier to generalize and enter them in, such as install foreman, install laborer, maintenance foreman, or even maintenance labor. And in this case, because I'm up in Canada, I have some snow employees as well. Just remember to include all of the staff that would be working in the field in your field labor budget. That's the most important point to take away when entering in your field labor employees. You'll also enter in the number of staff that fall within that role, the hours per year that they work, so you can total those up. You can take a look at your payroll summary from last year, see how many hours those individuals worked that fall within each role that you've entered in here. If your employees do work overtime, you can enter in those hours here as well. And then you'll want to enter in the average wage for those employees. So how much you're paying them on an hourly basis. Now, if you do any type of bonuses, this field would be for guaranteed bonuses. So if you give a gift card at Christmas and you know you're giving that gift card 100%, you'll want to include that bonus amount right within that employee's wage. And on the right-hand side, you'll see it's going to take all of the information that you've entered. If you've entered in more than one staff, then it's going to multiply your numbers by the number of staff you've entered in here. So it's letting us know how many or how much of the wages we need to recover for this upcoming year. So it's fun to play with this a little bit. If you do want to add any promotions or raises, this is where you would just increase the average wage amount, and then LMN will do the calculation for you. You can then take a look at your net profit amount down below here under the profit and loss. You can see if you can actually afford those raises based on all of the other costs you've entered into the system. Now, you might want to play with that a little bit after you've entered in all of your costs, and then you can see where that net profit lays if you do want to give your employees a raise or maybe even a bonus. To add a new line item, you'll click the new button in the bottom right corner, and that's how you can enter in all of your hourly field staff. Now, if you do have salaried staff, there's also a section to enter those staff as well. So if you click on the salaried field staff at the top of the screen here, this is where if you pay any of your field staff a salary for the year, you can enter that information here. So if you click the new button, this is also where you can enter in a portion of the owner's salary. So if they work in the field maybe 50% of the time, I'm going to just enter in here owner 50% salary. We'll leave the staff as 1, and then you can put in how many hours the owner actually works in the field. So in this case, let's say it's only 600 hours, and then we'll put a portion of their salary in this section as well. Now, when we get to our overhead budget, that's where we'll put the remaining amount for the owner's salary. And we'll go ahead and we'll click Save. All right, so next we're going to take a look at what the field labor burden is, as well as the field labor ratio. So to dive into a little bit more detail, the field labor burden is going to refer to the cost of expenses over and above the field labor wage. So what this is going to do is it's going to recover any payroll tax, workers' comp, or unemployment insurance as a percentage. So you'll notice we didn't enter any of this information within the hourly or the salary rate. We're actually going to calculate this as a percentage to add it to our field labor budget. So how do we calculate the labor burden? So you can take all of your additional expenses, such as payroll taxes, workers' comp, unemployment insurance, add those additional items together, and then divide that by your total field labor wages. So as you're entering in your hours into your field labor budget, you can take those total hours and all of your expenses and do the math that way. You don't want to do the math. We do have an industry average here for you. You can enter in 20%, and that'll make sure you include a certain percentage for those additional payroll taxes or workers' comp or any of those additional fees on top of the hourly or the salary rate. Now, when we talk about our field labor ratio, you'll see this on every screen within your budget. So for your field labor, your equipment, your materials, this is going to show you, based on the work breakdown you entered on your budget info tab, the percentage of sales that you're actually spending, for example, on your field labor. So what we're doing here is we're taking your field labor wages, we're dividing those by your sales, and that's going to give you your field labor ratio. So in the top right-hand corner of your field labor budget, you'll see your own field labor ratio as a percentage, and you can then compare that to the industry average. So again, based on those percentages you outlined within your work breakdown on the budget info tab, you can compare your numbers and your costs to other similar landscaping companies within the industry. So if you do see your percentage in green, that's great. You're kind of right on the money with the benchmark, hitting the industry average with your field labor spending. If you see your percentage in red, that might mean you're over 3% or under 3% in comparison to the industry average. And that can be okay. You'll just want to keep an eye on this. Again, this is just a benchmark for you to compare your numbers to. As you're outlining the rest of your costs in your budget, you can go back, analyze your ratios on each screen, and see where you're high in areas and low in areas, and then we can manipulate your budget to maybe help you forecast for more equipment if your field labor ratio is a little bit high. So with that being said, just make sure you're checking your ratios as you're moving through your budget, and you can always come back and manipulate your data if you need to. So next we're going to take a look at actually the ratio as a range. So depending on what type of work you do, if you're a design, build, install company, you might be averaging around 25% for your field labor costs. Where if you're a maintenance or snow and ice company, you might be sitting around 40%. Now, if you do a mix of both, you might be sitting somewhere in the middle. This is because you would have less labor costs when it comes to doing design build type work versus maintenance and snow. So next we're going to take a look at the equipment budget. Now the equipment budget is going to include all of our field equipment and vehicle costs. So this is going to let us see how much we're spending on our equipment, how much we're spending on our vehicles as it relates to our sales goal. Do we have enough equipment? Do we not have enough equipment? It really lets us analyze how much we're spending or how much we could be spending to actually hit our sales goal to see if we can actually purchase new equipment. So there are a couple of different ownership classes within the LMN budget. So first, we have our leased category. So if you're leasing vehicles or equipment, you'll want to choose that category so you use the lease equipment calculator. Now, if you're owning a vehicle, or if you own vehicles or equipment, or you're financing to own, then you'll want to choose the owned class. So that'll have a different calculator with a different set of questions, helping you outline your costs for those owned vehicles. We also have a group class. The group class is going to allow you to group multiple pieces of equipment together. So this helps you outline, say, a truck and a trailer, or maybe it's just a trailer with all of your little pieces of equipment within it. This will also help you when you're building your item catalog, as you can import that information right into your equipment catalog. And last but not least, we have the custom class. So this is going to be used for long-term rentals. So if you do snow work and maybe you're renting snow equipment for the season, if there's a big price tag on it, then you might want to use the custom ownership class, again, for long-term seasonal rentals. Now, the only difference with the custom class is that there is no calculator associated to it. So you'll just enter in the cost that it's costing you to actually rent the equipment. This will allow us to use any of the equipment we enter here when we go to build an estimate, so we can recover all of the costs or all of the spending for our equipment and vehicles through our estimates. So a couple of best practices here: only enter equipment that you use in the field. So again, think of how you estimate. If you're going to be estimating for a truck that's driven to site that takes your crews there, or if you're using a skid steer on site, you'll want to enter all of your big pieces of equipment into your equipment budget. And even if you own the equipment, we do want you to enter it into your budget. A lot of contractors do own their equipment and it's fully paid for, but we need to enter it into our budget because we still want to estimate with it. We still need to recover a cost for it. There's still going to be repairs and maintenance. You still have to pay for gas and fuel. So we do want to make sure it's in our budget. So when we go to estimate, we're actually able to recover the cost for that own equipment. And to make it easy for you when entering in your budget information, group your equipment by type. So if you have 5 of the same types of crew trucks, or maybe a couple of the same skid steers, you can enter those in by type, update the quantity, and then you don't have to create a line item for each of those individual pieces of equipment or vehicles. And remember to enter your field equipment, fuel, repairs, insurance, and rental costs. Those will be at the top of your equipment budget. They're easy to miss. Don't miss them. We need to make sure we're recovering those costs for your field equipment. And last but not least, depreciation is included in the equipment cost calculator, so no need to include it in the actual purchase price. All right, let's jump in. Let's take a look at our equipment budget. So back in our LMN budget, on the left-hand side, we'll click on equipment. This is where we'll enter in all of our field equipment, or all of the equipment you would use to build an estimate. So down below here, you can see that I've grouped my equipment by type. And if you want to add a new piece of equipment, just click the new button in the bottom right-hand corner. Now I'll show you what each of those ownership classes look like. So for example, I have a backhoe loader. I only have one. I've entered in the quantity as 1. And then I've chosen my class to be custom. That's going to allow me to enter a cost per year for that piece of equipment. As I mentioned, there's no calculator associated with it. The second ownership class is going to be owned. So I have a couple of crew trucks, a total of 3 that I own. So if I click on this little cost calculator, this is where it's going to ask me a couple of different questions, like the replacement value or any fees that I paid when I purchased this equipment. You'll enter in how often you use it, the estimated value at the end of its life, the number of months you use it, and then you can enter in an inflation or interest rate. LMN is going to calculate the total cost for that piece of equipment for the month and the actual year. So if you've entered in more than 1 piece of equipment, like I have up above here, I've entered in 3. So the system is actually going to take this annual ROI and multiply that by 3 to give me my total cost for all 3 pieces of equipment. Now I'm just going to click done down below here, and we'll take a look at another example of an ownership class. So if I lease my 5-ton crew truck, I've chosen my leased calculator here. I'm going to click on the calculator icon, and you'll notice there's a different set of questions. So this is based on leased payments. So how much do we pay monthly? How many payments do you make per year? Enter the number of months per year you use it. And then again, the system's going to generate that monthly cost as well as the annual cost for that piece of equipment or vehicle. And down below, I've actually set up a group calculator. So as I mentioned, this will allow you to group smaller pieces of equipment together. Really helpful if you have install or maintenance trailers with all of those little pieces of equipment and tools within them. When you go to estimate, you won't have to include a shovel and a wheelbarrow. It's all going to be included in your group calculator here. So we know we're recovering all of those small costs for that equipment. So if I click on the calculator icon for my group class, there's actually no questions here to do the spending or cost calculation. It's going to ask you to create new items by clicking the new button in the bottom right corner, and that's how you can add all of your small pieces of equipment. So you'll include, for example, your trailer, you'll enter in the quantity of trailers, your purchase price, resale value, and how long you expect to use it. The system will then give you a cost per year for that piece of equipment. And then you can continue adding all of your small equipment and tools. Again, the system will calculate how much it's going to cost you per year. And then down below, it's going to group all of those items together to give you a total cost to recover. So making it a little bit easier, again, when we go to build estimates, all I will need to do is choose my install construction trailer. I know all of the costs for all of my small tools and equipment are already included in there, so I don't need to worry about estimating those. And then I'll click done in the bottom right corner. Up above here, you'll see your equipment summary, so totaling all of your costs for your equipment. And then don't forget to enter in your general expenses for your fuel, repairs, and insurance. And I just want to make this super clear. This would only be for the equipment you've entered down below in your equipment budget. And then on the right-hand side, you'll see your equipment ratio. So what you're spending in relation to your sales goal. So again, compare what the industry averages, compare it to your ratio, see if you're right in line with your spending on equipment. Again, this just serves as a benchmark so that you know you're on target to actually recover your equipment costs. And again, we'll click Save Changes in the top right-hand corner just to save all of the data we've entered in down below. Next, we're going to take a look at our material budget. So our material budget is going to include all of our job material expenses. So that could be anything from topsoil, gravel, salt, really anything, again, that you would bid on an estimate. So this is going to let us project all of our material expenses so we can take a look at our sales, what jobs we're actually forecasting, see what materials we're going to need to complete those jobs, and then we'll enter that into our material budget section. So a few best practices here. You'll want to only enter materials that are used in the field. So again, anything you estimate material-wise, you'll want to include in this section of your budget. And you'll want to forecast all material costs. So again, set your material costs based on the jobs you're forecasting to do for this upcoming season. You don't want to take a look at last year's expenses only because you're going to be doing different jobs this year. Some might have more materials than others, so it won't be the exact same as last year's material expenses. And again, group material totals by division. You don't need to enter in every single individual material item. Group them by division, calculate that total, and it makes it a lot easier, way less data entry, and you can finish entering in your materials a lot faster. And don't forget job disposal fees. For example, if you have a bin on a job site, you're charging the customer for that bin on the estimate. This is where you will want to include those job disposal fees right within your material budget. So let's jump in. Let's take a look at our material budget. Back in LMN, I'm going to click on materials on the left-hand side. And down below here, you can see I've entered my material expenses by division. You can add a new item by clicking new in the bottom right-hand corner. And you'll outline your previous material expenses for each division, as well as what you're forecasting to spend on materials for this year. Up above, once you do enter in that information, you can see your previous total versus your current total. And if you do pay tax on material purchases, you'll want to enter in that percentage here. Now, I do want to note, don't duplicate your taxes. If you included it in your cost down below, then you can leave this material tax percentage as 0. So just make sure you're not putting it in 2 spots. That's going to increase your material costs really for no reason. And we want to keep those as low as possible in relation to your sales goal. On the right-hand side, you'll also see your material ratio. So again, based on your work breakdown, your percentage of sales for each division, this is what you're forecasting to spend on materials for the upcoming year. So again, compare that to the industry average, see where you're sitting. If it's a little low, make sure you have outlined all of your materials. Do a double check to make sure you've included everything for this upcoming season. All right, next we're going to take a look at the subcontractor budget. So our subcontractor budget is going to include all of our associated costs related to our subcontractors. This is going to allow us, when we build an estimate, to actually add a markup to our sub cost so that we're actually making money on those jobs where our subcontractors are working. So it's going to help us forecast all of our subcontractor expenses, so we know what net profit we can put on top of that, so we're making money on our subs as well. So when you are entering your subcontractor costs, make sure you're forecasting expenses. So you'll want to set subcontractor budget based on your forecasted job sales. Again, you don't necessarily want to just look at last year's expenses for subs. Again, your jobs are going to be different this year. You're going to need different subcontractors. So just make sure you're taking a look at what type of jobs you actually have in the sales pipeline as it relates to your subcontractors. And again, we can enter our subs by service type. So you don't necessarily have to type in each individual subcontractor name. You can do it by electrician or masonry. Again, do it by service type, might save you a little bit of time. So let's jump in, let's take a look at our subcontractor budget. We'll click on subcontracting on the left-hand side, and this is where we'll enter in our subs. So you can click the new button in the bottom right-hand corner. You'll outline your subcontractor, again, by service type. You'll enter in your previous cost for those subcontractors, and then you'll outline your forecasted costs for this upcoming year. So maybe your subcontractor costs are going to be a little bit less because you're now doing more of the work in-house. That can happen too. Just make sure you're taking a look at the jobs that you forecasted for this budgeted season. And then up above, you can see your subcontracting summary as well as your subcontracting ratio. Now you'll notice here there is no industry average to compare your sub ratio to. That's because not all contractors use subs. So we didn't have a really great benchmark to actually compare these costs against. All right, so that's subcontracting. That's more of the easier one. And if you don't use subs, you can leave this section blank. Again, if you don't have any subcontractor costs, that's okay. you can leave this blank. So now let's take a look at our overhead budget. This is the fun part. This is where we're going to outline all of our indirect costs. So all of our overhead expenses are going to help you identify what you're actually going to be spending for all of those little things like office salaries or office renovations, uniforms. These are all of the indirect costs that you wouldn't include on an estimate. So you wouldn't estimate to recover cell phone costs or anything like that. We're going to include them in our overhead expenses section of our budget so that when it comes to estimating, our budget produces an overhead markup so that we can recover our overhead costs kind of behind the scenes. So it's really important as we're going through entering our overhead expenses that we forecast all of our expenses for the upcoming year. So you'll want to make sure that if you are doing, say, an office renovation, you'll want to include that in here. So as you're building your estimates, we're actually recovering for that cost. And it's a really great way to actually plan for big items like that. If you include even 50% of an office renovation, it's going to help you save as you're building estimates because you're going to be charging your customer for that overhead expense. Now, just be careful with this planning. You want to make sure that your net profit is still in the positive numbers. So as you are outlining your overhead expenses, just be careful with that. You'll also want to enter in any overhead equipment. So if you have a skid steer sitting at the yard because you need to load materials from the yard inventory into trucks every day, you'll want to enter in your overhead equipment in the overhead equipment section. We want to recover those costs through our overhead markup so they aren't missed. So we're actually able to recover those costs through our estimates. You'll also want to include a percentage for fuel, repairs, and insurance. Now, this is only going to be for overhead equipment. We already entered in our field labor equipment, fuel, repairs, and insurance. This section is only going to be for our overhead equipment. And we'll want to remember if our owner, or maybe it's even a project manager, works in the field but works in the office as well, we'll want to divide the remaining hours and salary into our overhead wage section. And I'll show you where to enter that in just a minute. All right, so we'll jump back into LMN. We're going to click on overhead on the left-hand side. And this is where we'll enter in all of our overhead expenses. So again, if you did copy a sample budget, we'll have a really good list of overhead expenses. So you can go through these items here and you can update any of the costs that are already entered in here for you. So you'll want to make sure that you include your overhead expense item, enter in the previous cost, so what you spent for that item last year, and then forecast your spending for this year. The system will then show you your difference in percentage, so whether it's increasing or decreasing. And it's also helpful to enter in any comments in your overhead section. So when you do go to copy this budget for next year, you know exactly what was included in the cost or expense that you've outlined. So making it easier for you to update your numbers on an annual basis. So again, our overhead expenses could include things like office supplies, any type of meals and entertainment, if you have any accounting fees, if you pay rent and utilities, all of those indirect costs that you would not estimate to recoup the cost for. Now, if we scroll up to the top, there's also a tab here for overhead wages. So I'm going to go ahead and I'm going to click on that. This is where you'll enter in any overhead salaries. So anybody that only works in the office, these would be the people that don't work in the field. We entered in our field labor wages under our field labor budget. Now our overhead wages are for those staff that only work in the office and not in the field. Now you'll see this is where I included the other portion of the owner's salary. So it's letting me split it between my field labor and my overhead. So you would just enter in a portion of the previous wage that they were paid, and then you can forecast that other percentage in relation to our field labor budget costs. Now, if we click on overhead equipment, this is where you'll want to enter in any of those vehicles or equipment that are strictly used at the shop, or maybe it's the owner's truck, or if you have office vehicles, you'll want to include that in the overhead equipment section. Again, because we wouldn't estimate to recover those costs. I've also entered in fuel, repairs, and insurance under this category, again, for only my overhead equipment and vehicles. And this works the exact same way as the equipment budget, where you have your ownership classes and your different calculators. Now, I do want to mention here, you'll see a line item for shop materials and consumables. Now, if you do have a shop full of tools and maybe smaller pieces of equipment that you didn't include in your equipment budget, you could enter in a lump sum for those tools here. So at least they're going to be recovered through the overhead markup when we build our estimates. You wouldn't necessarily estimate, something small like a shovel or a wheelbarrow or a hammer. You don't need to enter those into your equipment budget. Again, create a lump sum cost in your overhead equipment, and we can recover those little pieces of equipment and tools in our overhead markup. Now, again, make sure you review your overhead summary. It's always helpful to use your P&L statement. Go through line item by line item to make sure you haven't missed anything, and just check it off as you go. You'll also see a labor burden up above in the top left-hand corner. Now, this is going to be for your overhead salaries only. We entered in a field labor burden on our field labor budget. This percentage here is strictly going to be for our overhead staff. Now, this percentage is usually a little bit less. We usually have more laborers in the field than in the office. Usually the industry average is around 10%, but again, you can do your own calculation by taking your payroll expenses, your workers' comp, your employment insurance, and dividing that by your total overhead wages, which once you've entered them into the system, you can do the calculation by taking a look at your number here. And then you can compare your overhead ratio to the industry average. So in this case, I'm a little bit low. Maybe I've missed an overhead expense, but if you are low in the overhead category as it relates to your sales goal, that could be a good thing because we don't have that many overhead expenses, which, as we know, can get very expensive over time. All right, so that about covers the overhead budget. Next, we're going to take a look at the profit and loss. So if we click on this tab here, once we've outlined our cost of goods sold, our overhead expenses, the LMN budget is going to calculate a net profit for us. So this dollar amount here is letting us know how much money we're actually going to put in our pocket at the end of the day once all of our expenses are paid. It's going to allow us to make a certain profit margin or a net profit. So when we go to build our estimates, we're actually going to be marking up our estimate items by the profit margin that's generated here in our budget. So again, the budget really is that foundation for building estimates. You're recovering all of your costs, but making a net profit on top of that. And we'll keep moving along here. We'll also need to choose an overhead recovery method. So I'm going to click on that menu item on the left-hand side. So you'll notice here that there are 3 different types of overhead recovery methods. The first one being multiple overhead recovery method. This is going to allow you to put unique markups on different cost types. So for your labor, your equipment, your materials, and your subs. And you will see industry average percentages already entered in there for you. Again, subs are the easiest to manage, so we're not marking them up as much as, say, we would our materials. And then same goes for equipment, and the remaining amount will go towards our labor markup. So what this is doing, it's taking our total overhead costs that we've outlined in our overhead section of our budget, and it's splitting it up across markups. So when we go to estimate, and we add, say, labor, equipment, and materials to our estimates, we're going to mark those items up by the percentages we enter in here so that we are recovering our overhead expenses. Now, the multiple overhead recovery is really great if you're a landscape business and you do a mix of work or even design build type work, because it's going to allow you to enter in custom markups, so allowing you to be a little bit more competitive on certain jobs that you want to win. Now, if we scroll down, we also have a field labor hour overhead recovery method. This is going to take our forecasted overhead expenses and apply them as a labor rate on top of what we would charge for our hourly labor. So taking, as you can see here, it's adding $17.57 to our hourly dollar amount that we'll charge on our estimates. This is really great if you are just a maintenance company, really labor heavy, and you want to recover most of your overhead, or actually all of your overhead, strictly through your labor markup. And last but not least, we have single overhead recovery. This is going to allow you to recover your overhead costs across one single overhead markup. So your labor, your equipment, your materials, your subs will all be marked up by the same percentage so that you can recover your overhead expenses. So you'll want to go through, you'll want to pick one of these overhead recovery methods. If you need to review what they all mean, you can see a description right underneath the title, and then you can click the Activate button based on the method you would like to use when it comes to estimating. And last but not least, we're going to click on Analysis right underneath Overhead Recovery Method. So I'm going to scroll down here, and we're going to take a look at the budget ratio analysis. So the Element budget has artificial intelligence actually built into it. So it kind of works as a consultant for you, analyzing your numbers and your spending trends. So it's letting you know where you're high in areas in spending, where you're low in areas, and again, comparing those to those industry averages based on the work breakdown you entered on the budget info tab. So it's going to ask you a series of questions within each category, just making sure you didn't miss any expenses or costs, or making sure you didn't duplicate anything. You can go through this section here, and if you click on the Fix This, it will take you right back to that section of your budget that you need to do a double check on. And if we scroll up, once you're done analyzing your budget, you'll want to make sure that your profit is actually in the positive percentile, so that when you go to build your estimates, you know that you're making a net profit on every estimate that you bid. And we can click the Activate Budget button, and you'll see the status changes to active. And if we scroll up and go back to our budget info tab, you can also see that this budget has been activated, and we can now use it to build estimates. All right, so that's kind of the overview of the budgeting tool and business planning, making sure you're entering everything into the budget, where it should go. And now we can take some questions at this point. So we'll take a look at the tab here. We do have a question. If we have a full-time mechanic working at our shop, where would we enter that mechanic's salary? All right, great question. I'm just going to jump back into the budget here. And if we click on overhead, we'll want to put that in our overhead expenses. So if we click on overhead wages, this is where we can enter in that mechanic. And we can enter in what they made last year. And then we'll forecast what they're going to be making this year. And again, if you are going to give them a raise, make sure you include that in your forecasted amount. We'll want to include the mechanic in our overhead because we're going to recover their wage through our overhead markup. We wouldn't want to put it in our field labor because we wouldn't necessarily estimate a mechanic on our estimates to our customers. So that's why it's important to put it in our overhead wage section. Great question, thank you for that. We do have one more question here. What is the difference between gross profit and net profit? Another great question. So I'm going to click on profit and loss on the left-hand side. And this is a great section that will actually show you your gross profit versus your net profit. So if we scroll down here, it's taking your sales revenue that you've outlined for your forecasted sales, and it's also showing you your cost of goods sold, so all of your job expenses. If you take a look at the profit section, you'll see gross profit is going to be your sales, so this dollar amount here, minus your job costs, which is this dollar amount over here. So your gross profit is only going to be your sales minus your job costs. That's why it's really important to always take a look at that net income, because the net income is going to deduct your overhead costs from your sales as well as your job costs. So at the end of the day, you want to look at this net income number, because that's what you're actually going to be putting in your pocket once all of your costs of goods sold are paid, as well as your overhead expenses. So again, you can take a look at this right within your budget to see the difference between your gross profit as well as your net profit. That's great. Thanks for the questions, everybody. Now we'll jump into just a quick recap at the end of the webinar here. So we went through quite a bit today. We forecasted our sales for the upcoming year. We've entered in our field labor, equipment, materials, subcontractor costs, and our overhead expenses. We analyzed our budget for profit. Again, take a look at that analysis tab, see where you're high in areas, see where you're low, and see where you can go back and make some fixes to your budget if you need to. And last but not least, we activated our budget for estimating. If you do want a more in-depth analysis of the budget, you can always jump into the Academy online. It's self-paced, step-by-step training, so you can implement any section within your LMN account. You can access the Academy right through your LMN account. On the left-hand main menu, you'll see an LMN Academy button. If you click on that, you can log right in and start your training. And don't forget about our forms library. This is a great section where you can download and customize tons of processes and procedures, anything from HR procedures, health and safety. There's even some job descriptions in there. So really helpful if you're just building your business and you need some organization and guidelines and procedures in your company. Jump in there and take a look and see what you can use. Now, if you're looking to chat with other companies that are using LMN, you can join our Facebook and LinkedIn user groups. These are really great. Again, if you just want to do some peer networking, or if you want to see how other companies are using LMN for their business, it's also a great way to get new ideas to see how other people are running their business. So jump in there. If you don't have access to those already, you can use these links here. If you want to just take a picture of them, and you can get added into there through our support team. And if you haven't already, please join me tomorrow for Estimate 101. I'll be taking you through the CRM tool. I'll show you how to manage your leads and all of your contacts. That'll be happening at 2 p.m. Eastern Standard Time, and you can register at golmn.com/training. I just wanted to thank everybody for attending today. I hope you learned something new, and hopefully I'll see you in tomorrow's session. Thanks, everybody. Have a great day.